Let's say you are driving a car and you had an accident and now you are dead. So, is driving a car actually risky? I think not, because not everyone dies. But yeah, some do. So actually, my point was that everything you do, there is some risk involved into it. Maybe it can be driving a car, or maybe it can be some investment. But today, let's talk about financial risk. So let's say you did some research and you got to know that in future the steel prices are going to go down. So you bought some automobile company stocks because that company will get steel at very cheap price, and so yeah, they can manufacture more cars. But after some times the steel prices got increased, and that automobile company started suffering, and yeah, ultimately you lost your money. So if you see closely where was the risk involved over here, then you will get to know that the risk was actually in the steel prices, that is it going to go up or down. So yeah, risk is everywhere. Okay, so now let's look at the type of risk. Usually there are two type of risk. First one is systematic risk and another one is unsystematic risk. So in systematic risk, the risk is not in the hands of the company, but it is affected by the other external factors. Like for example, let's say there is a country whose economy is not doing so good, so ultimately the company will also not perform good results. Or let's say the commodity prices are too high, so again the commodity companies will also not do good. So basically the systematic risk depends on the other external factors, and it is not in the hands of the company. Then comes the second type of risk, which is unsystematic risk. So here, let's say the company management are doing some illegal activities, so that can be dangerous for the shareholders. So basically this type of risk are internal, and it can be solved by the company only. So now let's see risk and the reward. So basically, as we all know, high reward comes with high risk, which is true till a certain level, because if there is a high reward, then yeah, it is not 100% guaranteed. So here in stock market or any other investing thing, we need higher returns with less amount of risk. And how can we do that? I think you guessed it right, by diversifying the portfolio. Basically, not putting all the eggs in one basket. That means we should at least invest in 5 to 10 different companies, by which even if our one or two companies gets bankrupt, our other company will give us massive returns that will even cover our losses. So yeah guys, that's it for today. See you in the next week. And yes, drive safe. Bye bye.